Welcome to the HouseHack Q&A live stream. To date, we have raised over $14 million in 9 days for HouseHack, and I couldn't be here without you. So thank you so much for your support. Now, there was a question that I saw pop up in the chat, and I think it is the perfect way to start things off. And that is, can I give a 2-minute breakdown of the pros and a 2-minute breakdown of the cons for HouseHack? And the answer to that is yes. So first, what are the pros of investing in HouseHack? Let's get right into it. First, you get to passively invest into real estate and diversify into real estate from stocks. In my opinion, I think this is a huge deal. That is, the company, HouseHack, and myself deals with everything for you. Leverage, deal finding, renovations, tenants, wedge deals, growth, you name it. There are no fees. This is not a syndication. This is not a REIT. It's a real estate company, and we want to beat Redfin, Open Door, Roofstock, Invitation Homes, and American Homes for Rent. There are no fees like administration, 1% per year for assets under management, which means we're not incentivized to buy at the top of the market just to get a higher AUM like REITs or syndications are. We're incentivized to do what's right for the company and shareholders and us ourselves as investors. So no administration fees, no disposition fees for selling properties, no management of the management fees, none of that. And keep in mind, we're not flippers. So we don't have to immediately deploy capital. We can deploy capital strategically. And when we deploy capital, we are going to rent out properties. So that way we're not subject to market risks and we're not locking in interest rates at these prices because we're going to start by buying cash. And in the future, when rates are lower, that's when we'll refinance the portfolio and continue expanding. Now, I'm also investing in this company at the same valuation that you are with at least $5 million. So we're on the same exact page. Now, I'll tell you where there are some differences in just a moment, but we're also going to scale our property management team in-house. So that means we're not outsourcing to some random property management company or whatever. We're going to do it all in-house with the expertise of not only myself, my father-in-law, my family, the other employees that we have, but also Lauren, who's an excellent property manager. So everything that you've seen on the channel for the last few years and the work we've done over combined the last few decades, you're getting here. You're also getting real estate equity with the bonus of the artificial intelligence wedge finder that we created and are perfecting and have been perfecting or trying to perfect since 2019. You can learn more about that by just typing into YouTube HouseHack wedge finder, and you'll see my video on it, kind of demonstrating some of the features of it. And in the long-term future, we expect to get into things like fintech, banking, credit cards, and potentially expand into hotels, especially since we think the Marriott and Hilton models, for example, are pretty imperfect, seeing as they only own about 1 to 5% of their hotels. But that's a long-term play in the future. So the last really big benefit to know here, and then we're going to get into some of the cons, right, is that what you're really getting here when you're investing now is you're getting growth stock as founder shares, basically, in my opinion. So the way to look at this is very simply. American Homes for Rent and Invitation Homes, they sell for like 2 to 3 times book value. So that means you pay $1 and then maybe you get like 50 cents or 33 cents of value, right? That's called dilution. So in this company, because as an accredited investor, you're getting in at $1 equals $1, these are founder shares. There's no dilution day one. See, most companies have dilution when they raise money, and then they have stock-based comp in the future. Here, you have no dilution day one because these are founder shares. And I'm doing this because I want to do everything to make sure that in 5 years, people look back and they're like, oh my gosh, I want to invest more with Kevin. Like, I'm 30 years old. I have to make sure that my reputation is as perfect as possible. Otherwise, what ends up happening is people won't want to invest with me in the future, right? So this becomes very important. I really have to cherish that. So by getting people in at founder shares, $1 equals $1, I really think I'm doing my best to give the investors the absolute best opportunity to make as much money as possible. On top of that, Lauren and myself will be taking no salary and we will make no money until IPO. And so here's the stock comp plan, and it's tentative right now because we've got a group of founding employees and we're still finalizing that. But basically, once we IPO, ideally on the New York Stock Exchange, once we go ring the bell, and only when investors, original investors at $1 equals $1, only when they have actually doubled their money, which we should be able to do, but I can't guarantee that, right? I can never guarantee that. In fact, I'm going to say it up here on the pros list. You could lose all of your money, right? We have to be very, very clear about that. But I mean, if we're raising money at $1 equals $1 and our comps are trading for 2 to 3 times book value, or companies like Flow, a startup, is trading for potentially as much as 2.8 times book value, or Redfin or Open Door even more. Well, at least they trade on revenue, not so much book value. But anyway, in that case, we think we should do very well for investors. But again, that's only a think and an expectation. We can't guarantee that. But only on a double to investors and after IPO will there be a total of somewhere between 25 to 30% stock comp to founding employees. So basically between now and IPO, you've got a very clear path, in my opinion, of what's going on. Now, things could change when there are other fundraisers potentially in the future, or who knows if we have to hire a bunch of other employees. But at least tentatively, what our expectations are is no salary, Kevin and Lauren, all the way to IPO. And then only on a double to original investors am I expecting there to be somewhere between a 25% to 30% stock comp plan to the founding employees. And that's going to be under a very strict lockup plan. It's going to be under a 4-year lockup plan where basically you're only able to sell 20% at IPO. And then the next 80% is locked up for a year. The next 60% is locked up for 2 years. The next 40% is locked up for 3 total, right? And then the next 20% is locked up for 4. So in other words, like if we IPO and people are like, I'm out of here, Kevin didn't deliver a good product to the market, I get left holding the bag with founding employees, right? So that really motivates the founding team, right? The core of our company culture, to make sure that we bring a product to the market that the stock market will like and value as highly as possible. And so again, it's a double to investors before I get a dime. Now, again, I can't guarantee that'll happen. And that's where we get into the cons. When it comes to the cons, you do not have liquidity until hopefully when we IPO. And we have no idea when that'll be. That could be in 2028. It could be in 2032. I have no idea. You have to, at the moment, be accredited. That means you have to go to www.investready.com, get a letter certifying that you're an accredited investor. You can also get a letter from a CPA or an attorney, although generally investready.com is cheaper. Then go to househack.com, upload your letter, read the PPM, sign the subscription agreement, and you have to invest at least $25,000. In the future, we expect to be able to open this up to non-accredited investors, though many attorneys and other investors are saying that as soon as you take money from non-accredited investors, basically like lower net worth retail, you open yourself up to a whole lot of risks. In fact, people say things like, oh, every time Grant Cardone's ever gotten sued, it's been from non-accredited investors. So we still have to evaluate that. We have not made an exact decision on that, but I have scheduled an appointment tomorrow with our attorney who would handle the Reg A. So I will come back with more updates on that. So again, we might never IPO. That means we would probably have to pay dividends in order for you to see some kind of return on your capital. But we have no idea when we would do that. We have no expectations of doing that right now, because right now we want to reinvest cash flow. Remember, we're not flipping properties. We're not Open Door, Redfin. We think we can kick their butt by doing wedge deals and then renting them out for the short, medium, and long term. So you could also lose all your money. That's true of every stock, but it's especially true of startups. Now, I do think that we have a little bit of the benefit in the fact that we're not blowing money on expensive software engineers like a lot of money-losing startups, but I can't say anything bad about any other startups because every startup is at risk. The good news, in my opinion, is we're buying real estate, which we expect to cash flow quickly. I believe that we're going to need to raise about $50 to $60 million. So that way we can get to about 100 to 120 homes, or a mix of homes and apartment buildings, hopefully all wedge deals. We expect to have a break-even cost of somewhere between 15 homes and 55 homes, depending on how many people that we have on payroll. So even though right now we technically have, well, I should say, when I say we, I should say I, Kevin, because HouseHack hasn't actually employed anyone yet. That's because they're all working for my other companies, and we're going to kind of slowly move them over to HouseHack, right? Which is actually good for early investors, because that literally means right now our cash burn is very, 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 very little because there's no payroll yet. And what we're going to do is we're going to move our accounting staff over to HouseHack as we begin. So that way we're working with investor relations, and we're making sure that that's all taken care of. But we're not going to move over our property management and construction staff. They're going to keep doing work for me for my own, the 2 properties that I have, which are finally getting permits approved after 2 years. And what's beautiful about that actually is I get to keep 4 really high caliber people employed, not on the HouseHack payroll, so not on the investor's dime, but instead on other projects, which is really good because we don't want to buy yet anyway, right? We want to wait for the market. We're not like a REIT or a syndication where you have to spend the money or you lose it. And so we're going to keep our payroll as low as possible and not move everybody over onto the payroll yet and start burning cash when we're not even operating yet, right? That's really, really important. In my opinion, my goal is to be as cash frugal as possible. So we want to keep that payroll really, really tight and really only bring people on as we need them. So I think that's really, really important. Now, keep in mind, this is a C corporation. It is a Wyoming C corporation. So if you're wondering if you get a K1, the answer is no. If you're wondering if you get cost segregation benefits, the answer is no. You are getting stock. And we, as the company, are going to do whatever we can, whether it's cost segregation, depreciation, 1031 exchanges. We'll do that all at the company level. And those tax benefits should flow to EPS, earnings per share, which in the future could either be reinvested as retained capital, or we could pay it out as dividends or conduct corporate buybacks. Personally, I believe HouseHack is really, really unique because we can actually get wedge deals 3 times. I kid you not, we can get wedge deals 3 times. It's really, really amazing. We can get a wedge deal when we buy a fixer-upper for, let's say, $400,000 in a $600,000 neighborhood, put 50 grand into it. Great. That's $150,000 wedge on one property, right? That's a typical wedge deal. But we can also get a wedge deal if when we look at our book value in the future and we're a public company, and we're like, we are trading for less than our book value. We could, in theory, if that were to happen, buy back our own stock and basically get a wedge deal on top of a wedge deal. And then if we end up slicing portions of our portfolio and selling that to, let's say, pension funds, then we could potentially get a third wedge deal by taking a premium or fee on that. So like the opportunities for HouseHack to make money, in my opinion, are absolutely endless. I could take one wedge deal and basically turn it into a triple wedge deal. I think we've got some phenomenal ideas in the long term in terms of whether that's getting into hoteliering or really blowing up short-term rentals with some consistencies, so that way people can finally have consistency in Airbnb. That's the biggest complaint we have in our market research. The biggest complaint about short-term rentals is people are like, there's no consistency. I get, a landlord who takes 7 hours to reply, or whatever. Like those things are annoying, or things aren't properly set up at the home, or they're not as clean as they should be, right? That consistency is really missing. So we have a lot of really exciting things. Now, another thing to keep in mind is that for the time being, you are investing in Kevin, right? You're investing in Kevin, in Bill, in Lauren. Like you're investing in us, because the reality is I hold the voting shares. And it's going to be that way probably until we attract investor capital. I shouldn't say investor capital because we've already attracted investor capital. It's going to be that way until we probably attract some form of like venture capital investors who would demand some kind of voting share, or we just go public and then underwriters demand some kind of voting control, right? So until that point, you're investing in Kevin. So Kevin has control. Kevin has control over the board. Kevin has voting shares. You don't have voting shares. You have non-voting shares. So we want to make that crystal clear. All right. So again, like if you don't trust me, don't invest in this. Okay. And then and it's not to say, even if you did trust me, you still can't lose all your money. You still can. Keep in mind as well, this entire video is not a solicitation. The only thing that can actually solicit you to invest is the PPM, which when you go to househack.com, all you have to do is click one button and it says read our PPM. That is an SEC requirement that you are just one button click away from being able to read that PPM. Okay, so when individuals ask me this question, are you hiring yet? It's really important to know the answer. No, we are not hiring until we actually, first of all, see what happens in the real estate market in terms of when do we think we're going to get close to a bottom. Then we're going to move our construction and property management team into place to where we build our outposts in different areas. Think of it like Age of Empires. You put your towers up, right? That's just a figurative way of saying, okay, we've identified 3 or 4 markets. We now have somebody on the ground there. Kevin's going to travel there on a regular basis. I'm going to be doing a lot of traveling. It's going to be a full-time job. And then we'll be ready to start buying and signing contracts. And I'll be, of course, signing a lot of the initial contracts, probably all of them, for quite a while. So what % of cash on hand do you need to maintain while you source deals and time market fluctuations? Well, honestly, we're probably going to be almost all cash. We might take, for example, if we invest or if we raise $100 million, we're not going to be able to deploy that all extremely quickly, right? So what we might end up doing is taking, say, a third of that and investing it into maybe the 2-year treasuries, take a third of that, investing it into the 1-year treasuries, and then the other we'll put into like basically just a cash account. So that way, at least we're returning, we're receiving some form of a yield. And honestly, that yield could cover, a chunk of our initial payroll. So that's very exciting. Would you be investing outside of the United States? No, that's not the expectation right now. There are a lot of temptations, but I'll tell you, there is so much to learn about in the United States in terms of how many opportunities are going to come up from, Zoom towns turning into doom towns, and potentially the rebuild up of previous cities and metros. Like, there are some really, really exciting opportunities. So I did mention that in the future we would consider hotels, but initially no commercial property. Let's see here. Some of these I've already answered, so I'm not going to repeat things that I've already stated. The minimum investment, 25K, I've already mentioned that. Let's see here. Okay, so I've done a lot of talking already. I think it's very important to remember that we're not flipping properties. Wyoming and Delaware corporations are very, very similar. Like, they have a lot of good benefits for corporations. There are some specific benefits to real estate. I don't really know what they are. I followed my attorney's advice on that. Okay. Why not storage units? Yeah, it's just not what I do. And so that's not what HouseHack is going to do at this point. If you are an international investor, yes, you can invest. You must be an accredited investor according to the United States standards, which means you either go to investready.com or you get a letter from an attorney or CPA in your area, and then submit that documentation to us that you meet the United States definition of an accredited investor. Keep in mind that if you wire money, like many people already have, whatever currency you wire us, we are going to convert to dollars right away. So if you send us $100,000 worth of Chinese yuan, renminbi, and when it gets here and we convert it to dollars, it's only worth 99,700. That's just what you're going to get. So just keep that in mind. If you do wire your currency, we're just going to convert it as soon as we can to dollars, and that's what you get. And then obviously we would just amend your subscription agreement. The same would be true if it went up, right? Like, if the currency fluctuations were in your benefit, you would just get more shares. But I just want to be clear about that for international investors. So I think that's very, very important to just clarify. I like to clarify. Oh yes, this is actually a very, very good question. So folks, this is probably my favorite part about this. You can invest via your Roth or retirement account. This is so cool. You can invest as a trust, as an individual, as an LLC, as a corporation, as a Roth, a retirement account, whatever you want. But this is like really, really epic, because if you have a Roth right now and you're like, well, I'm accredited and I have a Roth. And remember, if you're not accredited, I'm working on something for the future for you. Probably going to be January before I really have anything, but I'll keep you updated. Okay. I'm not forgetting about you. I just want you to know, like, I'm working on it, and it's grueling, but I'm working on it. So, but the cool thing is, if you're accredited and you have a Roth, you could actually invest via your Roth. This is called a self-directed IRA, individual retirement account. And it's so cool because it basically means that, let's say you invested $100,000 via your Roth, and then we IPO'd. And let's just say it's a complete hypothetical, okay? No guarantees. It could be the opposite. You could lose everything. But let's say you put $100K in and it turned into $300,000 at IPO, or $500,000 at IPO, whatever number you want to use, right? That would meet the condition of Kevin being able to actually get paid, subject to all the lockups, right? I'm going to get shares subject to really strict lockups that we already talked about, only after IPO, no salary for Kevin or Lauren. But anyway, let's say you put let's say you put 500K in, or what was I saying? I messed up my analogy here. Let's say you put $250,000 in, and sorry, I'm getting so messed up with numbers. So you put in 100K, now it's worth 300K. Let's go with that. You put in 100, it's worth 300K. It's in your Roth. You sell it on IPO day and you get that 300K out. You might not have to pay any taxes on that if you had it in your Roth. Like, that is so freaking awesome, right? So that is something that's gotten me very, very excited. Now, if you want to do that and you're like, okay, Kevin, you've convinced me, like, I want to invest my IRA. what I recommend you do is go to metkevin.com/chat. And this is a really important place. So write this down, like go here, metkevin.com/chat. And there are two channels that you want to look at in that because they're Discord channels. So the first thing that you want to look at is the public news from Kevin channel. It looks like this right here. And so you can see right here in this box here, this is where we have all of the steps for you to invest via an IRA, and we have a referral for you. We do not get paid for this referral. We just want to make it easy for you. But then you could also go down here to Kevin's startup right over here, right? And you could ask me questions and I'll reply to you in that Discord. So that's metkevin.com/chat. Download Discord, sign up, and then look for that public news section where the self-directed IRA recommendation is. You could ask your custodians like Schwab or TD Ameritrade or whatever, but honestly, most of them don't want to do it because it's not very profitable for companies that don't specialize in self-directed IRAs to do that. Can you invest from New York? Yes. Okay, I am not a fan of rural accountants. I think rural accountants. I'm not a fan of rural real estate because it's very difficult to comp. Comping real estate is extremely important. Plato's philosophy is completely unrelated to this company. That has to do with stocks and exchange-traded funds. Keep in mind that I am applying to be a financial advisor. I've already passed the test. I expect to be a financial advisor. We have filed for 3 exchange-traded funds. None of those things are active yet. I'm not a financial advisor at the moment because I still have to wait for my paperwork to get back. We don't have ETFs right now. Those are completely separate from HouseHack. Like HouseHack has nothing to do with those things. So let's see here. I can make you absolutely zero guarantee in terms of when you're going to get your money back. And if you even have to ask when you're going to get your money back, you should not consider this. It's just probably not for you. And I'm just trying to be honest, okay? Like if you have to ask, when am I going to get my money back? Probably not for you. Or like, what's my rate of return going to be? I have no idea. I literally have no idea. I have a goal. My goal is that we IPO in 2028. But, if we're in a massive depression in 2028 or we're at war with China, we're not going to IPO, I mean, I don't know. Anything could happen. So, let's see. If you see Meet Kevin in Discord, like the yellow, that's me. Okay. Only I chat as Meet Kevin on Discord. Liquidity for before IPO will be very, very bad. I'm gonna hold on. Let me turn on slow chat just to make it so I can catch up a little bit and give everybody a fair chance here. So the problem with, hold on. Let's also turn on a 20-minute subscriber delay here. So you do not want liquidity before IPO because while there might be an opportunity for us to buy your shares back, I'm going to tell you right now, it's going to be at a discount of what they're worth. I don't know how much. I can't even guarantee you that we will buy them back because we're not in the business of buying the stock right now. Yes, there is a potential of using special purpose vehicles to get non-accredited investors in. Yes, but that's not an expectation right now. I do want to be very, very clear. This is not a syndication. This is very, very different from what Grant Cardone does. Grant Cardone is a syndicator. He promotes syndications, and they take, I believe it's like a 30 to 35% waterfall fee. They take a 1% annual management fee, which they can defer until later so they can pay you more cash flows in the meantime. Some investors, I think accredited investors, get a preferred return of like 6% or something like that. But now you're talking more sort of dividend style rather than potentially growth, in my opinion. Although you could potentially partner in the upside, but you're giving away a chunk of that to Cardone. And I don't know how much of an incentive there is to actually buy deals below market value as opposed to just deploy the capital via a syndication and then sit there and wait as the promoter. You're not getting into single family. You're not getting into fintech, banking, Airbnb, short-term rentals, flex-term rentals, artificial intelligence. That in the future we get SaaS out, right? Those are all bonuses. Those aren't guarantees. But we are a real estate company. We're not flippers and we're not a syndication. I'm not telling you that flippers are bad. Not at all. I think actually in any market there are flippers. We can actually deploy our model extremely successfully. And we're certainly not syndicators. So it's a very different business. Again, not saying that one is better than the other. We would, in terms of milestones, we would love to raise at least $50 million. That's the goal, ideally. But this is important to know too, is at the end of every month, there's going to be a deadline. So for example, if you invest before September 30th, you will have the option. It's kind of like a call option, but call options are very different from warrants. Okay. So you have to understand this. A call option is a derivative that is a contract between two third-party people. A warrant is an option between you and HouseHack in this case. And so what you're going to get is if you invest let's say you invest $100,000 by September 30th, you will have the right to, at some point in the future, probably a year to year and a half out, so middle of 2023 into 2024, we'll call you up and we'll say, hey, you have the right to exercise your options. And if you want, you can contribute up to an additional 55% of what you invested up front. So if you invested $100,000, we could call you in 2 years or 3 years or 1 year. We don't know. We could call you and say, hey, do you want to invest another 55%, so $55,000 at the original day one valuation? So it's kind of like having a call option, because obviously in 3 years, if we're bankrupt, you're going to be like, yeah, no, I'm not investing more money, right? But if in 3 years we're like kicking butt, and everything's going great, which obviously, knock on wood, that's what we hope, you might be like, I would love to invest at the original day one valuation again, because it's basically like, buying, for example, $3 shares for $1 or $5 shares for $1, right? You get that on a declining basis depending on when you invest. If you invest before September 30th, which means you really got to get on this right now, like tomorrow or right now, you should be going to investready.com, upload your W-2s. Honestly, if you're going to qualify to be an accredited investor via W-2, just go to househack.com and give us your W-2s and we can accredit you. If you have tax returns, we can accredit you. Just Google what it means to be an accredited investor. If you have assets, it's a little harder. We'd rather you just get a letter from investready.com, but it takes, verifying assets is the hardest part. But we don't have to do that if you could just prove your income is over 200K single or 300K joint. That's honestly the easiest way to be an accredited investor. But anyway, you could just go to househack.com. You could upload your ID, your passport, 2 W-2s. Boom, you could wire money tomorrow. You're in. As long as you wire before September 30th, you get those 55% warrants. By October 31st, those will go down to 50%. By November 30th, that'll go down to 40%. And so on. And so it's kind of going to phase out. And then we might close the round by the end of the year. And then obviously, the opportunity to invest goes to zero. So that's important to know. Now, if you are a course member, you'll actually get an extra 10% warrant. So that's kind of like our thank you to course members who were the earliest investors in this. So if you're a course member, you get an extra 10%, which means if you invested 100K, you can now double down with the 65% in the future. It's kind of cool. It's kind of unique. We really like it. But in my opinion, it's kind of like a free option, a free call option almost, but it's not a call option. Okay. I want to be clear. And that's sort of an analogy that I'm using. And obviously you have to invest your original money. So that means, there is some risk obviously to these options. Some people want to know if that's dilutive. And the answer is technically no. Okay. Let me explain that. And then I'm going to go back to questions here because that gets a little bit complicated, but I do think it's worth mentioning here how that works. So watch this. Okay. It's really, really cool. If we raise $100 million, our company is going to be selling shares for $100 million, right? Let's say you invested $1 million. Well, if you put $1 million in, you have 1% ownership in the company. If Kevin puts in $5 million, that means I have 5% of the company, right? If I put in, which at $100 million, I think I will. I think that's what I've committed to. I expect to. If we raise $100 million, I'll probably put in $10 million. So I'll own 10%, right? So anyway, let's use the example of you put in $1 million. Just because it's easy math, it's 1%. Now we, in 2 years, say, okay, we're going to call up the warrants. We're going to redeem the warrants. You can invest the extra 55% or whatever. And let's say now we raise $50 million because you don't have to do the full amount of your warrants. You could do whatever you want in increments of 5K. So now let's say we raise another $50 million. Well, now we have $150 million in the bank, and we're selling those shares at a $150 million valuation. And let's say you decided not to take part in those warrants. Well, your $1 million is still equal to $1 million. It's just now 67 or like 0.67%, right? So technically your ownership share went down, but the actual value that represents did not, because it's like every dollar we're raising is a dollar in the bank, right? So that's important to know for the warrants, because I know that created some confusion for people. They're like, wait, but then aren't you going to issue new shares? Yeah, but one share is going to equal $1, right? So it's in the bank. All right. The plan is to buy lots of wedge deals. I've already talked about Cardone Capital. You could scroll back about 5 minutes. Stock certificates will come by the time that we close the round. You'll have those. Do you have your Series 7, 67 to be considered an investment? No, 65. What percent of your net worth will be tied to this? It depends how much we raise. Are you going to consider new construction or just wedge deals? Sometimes you can actually get wedge deals on new construction, so it's going to depend. If I invest $1 million, am I able to work for the company and my investment? Well, I suppose it would depend what your resume is. I don't know what you mean for your investment, but no, we would love seven-figure investors. If you want to invest 7 figures, I'll get on the phone with you, you know? So like, that's fine. I've already been on the phone with multiple people who want to invest 7 figures. Look, the app is developed. The app is, I train it for like 20 minutes a day. It doesn't take a lot of work. We've really automated that process. Take it to Shark Tank. Why would I do that? This is such a good deal, in my opinion. No guarantees for subscribers. Like where can you get a startup for a 1-to-1 valuation? Like I've never seen it before. I mean, I'm sure it's out there. Thanks for the $1.99 super chat sticker. I've already talked about the non-accredited. I think our website is great. Keep in mind, the website that we have is just the investor website. So we're going to replace that with the actual company website. So right now it's like, it doesn't need lots of bells and whistles because we're going to get rid of it. Stock certificates will be electronic. What do you mean by 1-to-1 valuation? If we raise $100 million, we're selling shares at $100 million, which means if you invest $1 million, you own 1% of the company. Usually companies sell for 2 to 3 times book. Look, I mean, accredited investors, I think, understand this, but some people won't. So let me explain. Okay. There is a company that just raised $1 billion, and they're called Flow. I'm sorry, they didn't raise $1 billion. They were valued at over $1 billion. And they were valued at that with about a $330 million investment. Well, if you notice, that means people invested $2.85 to get $1. That's called dilution. You invest $2.85 and you get $1 value in the company. That's called being diluted. That's, if you don't understand dilution, probably not the time to be investing in private equity. We are raising money at $1 equals $1. So when people are like, cool, I want to invest, what's the valuation? It's whatever we raise. So if we raise $50 million, the valuation is 50 mil. That's crazy because most real estate companies sell for 2 to 3 times book. So what does that mean? Well, if let's say we raised $50 million at a valuation of $50 million, and now we sold for as much as, let's say, an Invitation Homes or an American Homes for Rent, well, that means our value would probably be in the neighborhood of $100 to $150 million as a company. So you're basically buying shares at nearly net asset value, nearly, because obviously there's some expenses and stuff. So you want to keep that in mind. make sure to read the PPM. Ross Gerber has expressed that he is investing by the end of the month, but that's up for him to tell you about. He's a board member, so he seems very excited. But I love Ross. I don't quote returns. I'm not gonna like Lucid you, like Lucid gives you a chart of, oh, this is how many vehicles we plan to produce. I have no freaking idea. If the market's going off a cliff over the next 12 months, we're not gonna buy anything. We're just gonna sit around and wait. If the market bottoms in March and it's time to start buying, then we start buying. I have no way to give you projections. So I'm not going to, because I just be BSing them. And again, really, if you want projections, probably don't invest, because it probably means you're not understanding how, in my opinion, this is an awesome opportunity, but obviously has the risk that you could lose everything, right? You have to keep that in mind. The trigger to IPO would be when we believe we have our company in a position where it'll be well received by the market, right? It's stable, it's established, we've been through refinancing cycles, and so on and so forth. Yes, you can invest if you're an international investor. If we also own real estate, and could HouseHack manage our properties? HE double hockey sticks, no. There's absolutely no chance in HE double hockey sticks we are going to work for anybody else. That is the absolute worst thing to do in the industry. We will do no construction for anyone else. We will do no property management for anyone else. That is a red line. I will not work for anyone. And neither will HouseHack. Sorry. No. Again, with hiring, we'll hire when it's time to actually expand. Could you consider tying future reward? Where is this? Reward tranches to book? No, we're not doing reward tranches. All of this reward tranche crap is gone. There's going to be at least the current plan is a one-time stock compensation plan at IPO, subject to investors first getting a double, and then us being restricted to a 4-year vest. And so that means we have to work for HouseHack for 4 years before we get anything. So if we IPO in 3, we don't get anything at IPO anyway, right? 4-year vest for founding employees. Then only 20% of our shares would actually be saleable at IPO. And then 80% is locked up for a year, 60% is locked up for 2, 40% for 3, 20% for 4, and so on until all are actually not locked up. So it's going to be very, very strict lockup. Can Gavin Newsom invest in this? He would be smart to, in my opinion, but again, I can't make a decision for anybody else. I shouldn't even say he'd be smart to, because that's really up to him, right? He needs to read the prospectus. But I'm just, I ran against him for governor, so I like to poke fun at Newsom. But then again, everybody makes fun of politicians. Google what an accredited investor is, but in short, 200K single income, 300K joint income, or 1 million net worth outside your single or outside your personal residence. And again, what was I going to say? Oh, it's or, right? It's or. So if you have 200K income and you're single, you don't need a $1 million net worth. He's an easy target. Yeah, if you're not accredited, you just have to wait until probably January. We have no idea. Okay, now we're just starting to kind of get redundant. So I'm not going to. Okay, if you. Yes, we're going to buy discounted single-family homes and multifamily homes. If you just want the one-line elevator pitch, invest with Kevin to get under-market single-family and multifamily wedge deals, and let Kevin handle the rest. If he wants to add bells and whistles, whether it's apps or services for tenants or short-term rentals, Kevin does that. You don't have to worry about any of that, okay? So there's your one-line explanation. We're buying real estate, hopefully below market value. I mean, we can't guarantee that it's going to be below market value. Remember to read the PPM, okay? It explains a lot. And you can see that by going to househack.com. Female Prop says, y'all remember what happened to his construction biz years ago? Yeah, we do. I took my construction business, which was really successful at operating from my own rentals, and I started taking on clients, which that's exactly why HouseHack will never do that. See, I learned the lessons really, really early on that we will not manage other people's properties and we will not do construction for other people, because that's when you do construction for other people and they're like, okay, cool. You got carpet on the staircase now. You got carpet upstairs. You got hardwood down floor. We'll replace the carpet on the stairs and upstairs because that's what it is now. We'll replace it with new carpet and we'll replace flooring for you downstairs with hardwood floors. And then 3 weeks into the project's like nearly done. And they're like, oh, I thought we were going to get hardwood on the staircase. It's like, A, really stressful. B, that's not in the contract. C, now you're complaining and now we have to take a loss to make sure you remain a happy customer. Like, that is a money losing business. So that is a business I will never go back into. And that's exactly the opposite of what we're going to do at HouseHack. But yeah, look, not every project I've had in the past has worked out. So you need to know that. Like, there's no guarantee here of success. You have to ask your CPA about qualified small business stock. It is a C Corp, so make sure when you talk to your accountant, you tell them that. Yeah, in order to scale, it's a really good question. So in order to scale, what we're going to do is we're going to start with 3 to 5 markets in different areas that we identify throughout the United States. We will have employees there that have been trained by me. So that way we can scale the Kevin vision with people who have been taught and educated by me. And then obviously I will be in charge of traveling there and supervising. Are we renovating and renting or just flipping? Okay. I think I've answered a million times and I'm going to stop with the redundant questions, but we are not flipping. We will be bigger than Redfin. I appreciate that. I think that's actually possible. No guarantees, but I actually think that's possible. Redfin's like a $1 or $2 billion company. Like, it's actually not that big of a company. Invitation Homes is my goal. That's a $22 billion company. Like, that's what I want to do. You can read the names of the board of directors in the PPM. No, you cannot 1031 into this. When will you do capital calls? You have to wire your money now. Like, if you want to invest, you have to wire. There's no capital call. You invest money, you commit to investing money, you send the wire now. Otherwise, if you miss the deadline, sorry, I guess you're not getting as many warrants. HouseHack.com is where the prospectus is. We've raised just over $14 million today. So to date. Okay. If you have more questions, please go to metkevin.com/Discord. I think we've pretty much gone through all of the questions, and now we're getting into repeat questions from people who are joining later, which is totally fine, but you could also replay the live stream. Appreciate y'all being here. Again, if you're an accredited investor, if you want to use W-2s and tax returns, go to househack.com. You can apply now. Just upload your ID, your W-2s, tax returns, 2 years. That's all we need. And then tomorrow you could go to the bank and wire your funds. If you decide you want to wire, let's say 25K now, and then in 2 months from now, you're like, oh, I think I want to invest in another 25K. If the round is still open, you can do that. So it's not like you have to go all in, and you really shouldn't go all in, right? I mean, there are a lot of people who are investing a lot, but their net worths are also larger. So yeah, in my opinion, this is extremely exciting. We've already discussed dilution. You could watch the rest of the video where we discuss dilution. If you have more questions, go to metkevin.com/chat. And I will be happy to answer your questions there. Otherwise, go to househack.com, read the PPM. That's the private placement memorandum, because this video is not a solicitation. That is a solicitation. Remember that you can lose literally all of your money that you invest in this. So only invest what you can lose. As with any investment, you could lose everything that you're investing. I have made a lot of optimistic statements in this video, but I want to make it clear, expectations and hopes are not a guarantee for reality. The thing that you want to remember is Kevin and Lauren do not get paid a dime until investors at least double their money. And we go public, and then we're subject to really strict lockups, 4-year vest, and it's going to take like 4+ years for our lockup period to be fully complete. Only 20% available at IPO. Again, the website is househack.com. That is currently just what we're using for investor relations. In the future, we will be replacing the househack.com website with the actual househack.com website, where people will be able to submit deals to us. People will be able to submit applications, resumes, vendor applications to us. That will come in the future. Right now, the only goal is fundraising, because we want to prepare for what I expect to be a pretty nasty real estate correction. And so we're not spending your money now, we are preparing. But we are raising money now, and the earlier you invest, the more warrants you get. It's that simple. Thanks so much for watching, and we'll see you in the future.